Welcome to Illuminati Silver. We tell it the truth about silver. Today is Sunday, the 28th of July, 2024. We're publishing our gold and silver weekly update for the weekend in the 26th of July. If my voice sounds hoarse, it's because I've been suffering from quite a bad cold these past few days, so I apologize in advance. Last week we said expect lower prices, and this is exactly what happened, though silver performed far worse than gold. What happened and what's likely to happen this coming week? Well, let's take a look. Now first, just a quick reminder that we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. Now gold fell $13 last week, falling from 2,401 to 2,388, having hit a high of 2,432 and a low of 2,353, a fall of 0.6%. Gold spread between high and low was $79, a little less than the previous week's $90. Last weekend we said gold would trade between 2,350 and 2,450, and again this is what happened. In fact, well within just $3. In sterling terms, gold finished the week at £1,856, that's down £5, and in euros it closed at €2,207, down €7. Have to admit, whilst we forecast and expected gold prices to fall, it was actually quite disheartening to see that happen. And regrettably, we may have some further falls ahead, at least very short term. However, silver fell $1.28, falling from $29.22 to $27.94. having hit a high of $31.49 and a low of $27.48, a fall of 4.4%. The difference between its high and low was a significant $4.01, though we have to admit that spike from $28.88 to $31.49 lasted but a minute or two. Otherwise, that spike would have only really reached, or the high, $29.46. Last weekend, we predicted silver would trade between $28.25 and $30.25, with an outlier range of $27.50 to $30.50. In sterling terms, silver closed down 92 pence, not far off a pound, at £22.76, and in euros it closed at 25.79 euros, that's down 1.13 euros. The gold to silver ratio rose over 3 points, from 82.2 to 1 to 85.5 to 1, following a rise of almost 4 points the previous week. Bitcoin currently stands up $1,040 at $67,626, and Trump supporting crypto at yesterday's Bitcoin conference does suggest cryptos will do well if he wins the next general election. Equities were mixed. Dow Jones closed up 302 points at 40,589. The S&P 500 was down 46 points at 5,459, and the Nasdaq Composite was down 369 points at 17,357, though the FTSE index, the UK index, was up 130 at 8,285. Oils were lower. Brent crude down $1.50 at 81.13, and WTI crude down $2.97 at $77.16. Dollar index is up 0.08 on the week, virtually unchanged really, at 104.31. Now if we take a quick look at the gold trend last week, it peaked mid-afternoon on Wednesday, fell back sharply, and began to recover slowly on Friday. Silver reacted similarly. So what happened? Well, last week's economic data primarily focused on Q2 GDP growth, announced on Thursday, which was much higher than the previous quarter, coming in at 2.8% compared with 1.4%. The PCE figures, though, gave comfort as they came in exactly as anticipated, with the year-over-year PCE index falling from 2.6% to 2.5%, and the year-over-year core PCE holding firm at 2.6%. Not terrific news, but also not terrifying. and the markets regained some composure as a result. Certain geopolitical tensions playing out last week also had a minor impact. Physical demand also played a role in gold and silver's performance this past week. India's decision to slash import duties on these precious metals earlier boosted physical demand, with gold premiums in India jumping to their highest level in a decade. Goodness knows where the silver price would have been had this not happened. This was a major reason why we saw prices rise earlier in the week, when in reality we were really expecting them to fall a little following on from the previous week's performance. Thursday's stronger than expected GDP growth initially put pressure on gold. However, Friday's personal consumption expenditure data showed a modest price increase in June, raising optimism for potential Federal Reserve rate cuts. Now, from a technical perspective, the market's been hovering just around the 50-day moving average support, a critical level that traders are watching most closely. Key support levels currently stand at 2,380 and technically 2234 and 2147. Gold climbs above the resistance of 2400. It will move towards the next resistance level of 2445 to 2450. Silver plummeted 15.868% from its May peak, with gold down only 3.89%. This divergence highlights unique market factors, not least of which being central banks obviously buying gold. The short-term outlook for silver, however, remains bearish. The break below key support levels and continued downward momentum suggest further potential for decline. Traders should watch for the crucial 50% support level at $27.22 most closely, as a failure to hold this level could accelerate the sell-off. That said, there could be some potential to help rally precious metals this coming week, though we recommend caution. On Tuesday, we have consumer confidence figures, and on Wednesday, the most important day really, we have the ADP employment report for July, plus the FOMC decision on interest rates. Now, one does not have to be a financial genius to realize rates will remain unchanged, but it will be the Fed's commentary as to the likelihood of interest rate cuts as early as September, which will be on every trader's mind. Thursday, we have manufacturing PMIs, and Friday, the US employment report for July, where 190,000 new jobs are expected, and the unemployment rate to hold at 4.1%. So this coming week could be a little more exciting, though we express caution simply because to a large extent, a September interest rate cut is already more or less priced in, unless there is some strong news to suggest that perhaps 2 cuts may be possible this year. The market may still nevertheless decline a little. Taking all of this into account, our gold forecast is a trading range of $2,340 to $2,425, with $2,300 and $2,450 as outliers. Silver we envisage will trade broadly within $27 to $30, with an outlier range of $26 to $30.50. What do you think? Do share your thoughts. Thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter, sign up there if you haven't already done so, and let's look forward to perhaps a more exciting week ahead. But certainly we wish you a prosperous one, without doubt.